Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 15th, 2025, and we're diving into Omnicom's second quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Omnicom has just released their Q2 2025 earnings, and there's a lot to unpack, from revenue growth to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. Omnicom reported a revenue of $4 billion for the second quarter, with an organic growth of 3.0%. John, how does this compare to their previous performance?
Omnicom's revenue increased by $161.8 million, or 4.2%, compared to the same quarter last year. This growth is primarily driven by a 3.0% increase in organic revenue, which is a solid performance given the current economic climate. Their adjusted EPS of 205 cents also beat the analyst forecast of 202, which is a positive sign for investors.
Operational efficiencies and future outlook. Despite the revenue growth, operating income decreased to $439.2 million. Can you explain the factors behind this, John?
Certainly. The decrease in operating income, down 13.9% from last year, is largely due to acquisition-related costs and repositioning expenses. However, Omnicom's adjusted EBITDA increased to $613.8 million, maintaining a margin of 15.3%. This indicates that the company is managing its core operations efficiently, even as it invests in strategic acquisitions like Interpublic.
Speaking of acquisitions, how significant is the Interpublic deal for Omnicom?
It's a major strategic move. Clearing the U.S. antitrust review is a key milestone, and the acquisition is expected to close later this year. This will likely create significant growth opportunities for Omnicom, enhancing their service offerings and market reach.
Regional and segment performance. Let's delve into the regional and segment performance. What stood out to you in this quarter's results?
Omnicom saw strong growth in media and advertising at 8.2% and precision marketing at 5.0%. Regionally, Latin America was a standout with an 18.0% growth. However, the UK experienced a decline of 2.5%, which is something to watch in future quarters.
What might be causing these regional disparities?
Various factors, including economic conditions and client demand, play a role. The UK market is facing challenges, possibly due to economic uncertainties, while Latin America is benefiting from a robust demand for marketing services.
Risks and strategic initiatives. John, what are the key risks and strategic initiatives that Omnicom is focusing on?
Omnicom is navigating several risks, including geopolitical uncertainties and economic disruptions. They've incurred $88.8 million in repositioning costs and $66.0 million in acquisition-related expenses. On the strategic front, their investment in the Omni platform is enhancing operational efficiency and client outcomes, which is crucial for long-term growth.
How does the effective tax rate impact their financials?
The effective tax rate increased to 30.2%, primarily due to non-deductible acquisition costs. This has a direct impact on net income, but it's a necessary step for their strategic expansion.
Key takeaways. In summary, Omnicom has delivered a strong quarter with a revenue of $4 billion and an adjusted EPS of 205 cents, surpassing analyst expectations. Their strategic initiatives, including the Interpublic acquisition, position them well for future growth. John, any final thoughts?
Omnicom's resilience and strategic focus are commendable. Despite some challenges, their ability to drive organic growth and manage costs effectively bodes well for their future prospects.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Omnicom's performance in the comments below.